Jada said, should I buy like a grand of Jasmine? I don't know. Should you? I think you should definitely buy a grand of Jasmine. 100%. I thought I want it to be more like this. I want it to be more find out right now. We're going to do less fuck around and more find out. That's what we're doing today. This is the members only live stream. And this is really frustrating because this is what I've decided to do for this week as a temporary fix. This is the members only live stream. But as you can see, Mike Lowry, a mod of this channel, does not have a star next to his name. And that means he's not a member. And even if you're a mod, you're not supposed to be in here if you're not a member. And he's not a member, even though he's a mod. And he's here. That's fine. Why is that? So that is because this stream is a members only stream, but it's technically not a members only stream because when I change it on YouTube to members only, the chat goes away. The chat gets disabled. I made 3 test streams. All of them did the same thing. When I make it members only in YouTube, the chat goes away. And the whole point of members only is so the members of the Telegram group can ask questions about the trades in the group. So what I'm doing for this week is I'm letting the public watch this stream, but I will only respond to Q&A questions from members. That's what I'm going to do for this week. Hopefully it's just a bug with YouTube. We've never had a problem with this before. And obviously we need to have the chat to do a members only live stream. So I will only be answering questions from members, but the public will be able to see a handful of the positions. Because of this, I am not going to give new positions on this stream, but I will go over a handful of trades we did this week. And if you want new positions, you will going to have to join the Telegram group. And if you want to join the Telegram group, send me an email at ajalphagroup@gmail.com. We've been working out the emails all week, trying to get the old people out, the new people in, trying to get renewal, stuff like that. So if you are in the Telegram group and you're over your time, some people have slipped through the cracks when there is a change of management. Either wait for the renewal email and you'll get 48 hours to renew once you get that email, or you'll be removed, or you could just step up and say, hey, I'm up, because we're going through them immediately. So there we go. But there will still be the charts we look at in this video, to be fair, we're going to have moving forward concepts for the 4 charts in here. But if you want the new setups that are not these 4 charts, you will have to get those from the Telegram group. So let's get right into it. What you got 3 days ago was Optimism. Optimism has been a coin I've been wanting to target. Optimism does generally have a lot of volume, a lot of liquidity on PHEMEX, enough liquidity to get in and out of large trades. All right. And as you can see, it was kind of bouncing off 163. We did grab the short from 108 to 176 and all the way down from 176 to 163. That was a job well done. Moving forward, what I decided to do with Optimism was change things around just a little bit. All right, because we obviously realized that this 169.8, basically the 170 level, is extremely important. And in the original setup I gave you, that level was not there. There was a bit of a gap between 176 and 163. So we kind of use this level, which was major support resistance, may I add you, to kind of shorten up the conditional range between 169 and 163 in the event it broke up. And of course, we're looking to short 163. And at this moment, we were actually between basically 170 and 163 with it ranging back and forth. So basically, this is a situation where 12-minute chart, we're reacting to getting back. We're looking for confluence of a long trade if we regain 169, and we're looking for confluence of a short if we lose 163. All right. And this is what happened. I will elongate this right here. All right. So this was the new range that I gave you right in here somewhere. We ultimately lost 163 and actually went not to, but beyond the target that was given here at 154. You can see 154 above my head there on the screen. That was the target for the short of 163. And that target did get hit and surpassed from the moment of that trade. So say you shorted the loss of 163 to 154 was a 5.4% trade. Well done to anyone in the group who got that one. And top to bottom was actually a 9.5% trade in about a day's time. I will go to the 12-minute chart for the sake of consistency. So we were, when you got that trade, it was in here. It was in here. And really the story of this one is the bear, anytime something gets below and stays below the 50 EMA, this red line here, bearish continuation. That's what you think to yourself. Anytime the price stays below the 50, bearish continuation. And when the price gets above the 50, bullish continuation. That's a conversation we'll have about the moving forward trade. But basically this was pretty simple. It did bounce around here a little bit, which that happens. But, this was the big win right here. Like I said, 9.7%, about 24 hours. This trade was given to the group well before that went off. That alarm, you should have reacted to that alarm. And also kind of look at the difference of when this alarm goes off here. All right. Kind of go straight down. At the time, we were coming up in this momentum wave. All right. We were coming up in the VWAP. We were coming up in the RSI. All right. And now look at the time the alarm goes off when it was the right time to trade. Look at this. We were coming down in the momentum wave. We were bleeding more red coming down in the RSI. All right. So a lot of times, even if you're below the 50 EMA, this alarm here and this alarm here, the confluence obviously for both of these is in the oscillator. All right. So because although you're below the 50 EMA, the alarm goes off. There's a big difference between what this setup looks like here, coming up, like kind of leaving green, coming up in the momentum wave, and this setup here coming down, getting more red, going down in the RSI. All right. That's the difference between the confluence and why this was the trade and this was the false alarm. The proof is always in the pudding there. Moving forward with Optimism, we do have these levels. If you're on the outside looking in, you're not in the Telegram group, this free setup, free levels to follow. A lot of these levels are either tethered to or striated in between the volume profile on the 2-hour chart. What does this mean? This means that like this level right here, 154. Here, let me kind of scoot this over. You can see a little bit better. This 154 level, you see how this support resistance level is lined up with the volume profile? That means that it's likely, to be here. But when you see levels like 163 that are kind of in no man's land in the volume profile, they're striated with the volume profile, it's very likely that the price will run through this level, which is why when I gave you this conditional range back here, we lost 163 and went to 154. That's why that's where that idea came from, because 163 is striated in the volume profile. It's aligned with a low volume node. And look what happened to the price. The price ran right through it, right down through. Boom. 9% trade, just like that. No problem. No questions asked. All right. Not rocket scientist. All right. It's just the forever search for confluence. All right. Lastly, so now, right here, right now, I'll kind of scoot these levels over a little bit. Optimism is between the range of 154 and 163. If you want to add on to here, that new low at 147, I don't hate the idea. I mean, it actually, that level makes sense, because look, right back here, it was a previous top and it was fought over like hell right here. So this level is certainly worth adding to the chart at 147 in the event this wiggles out. Oh God, go to my brush. in the event this wiggles out, right? We can range all we want. We don't care about the moves between 154 and 163. We care about the break. All right. And say we break 154, we could use 147 as a target, and that would be a 4.8% trade. All right. But things are looking a little bit more optimistic for Optimism right now, aren't they? Look at this. Bull cross, EMA bull cross. The 50 EMA is getting above the 200 EMA. That is bullish to see that, especially when the price is above both of them on the 12-minute chart. This, would lean towards bullish continuation. Even kind of zoning in. Oh, God. Even kind of zoning in on the oscillator here. Although we're looking at the 12-minute, you can clearly see the change from red to green, green dot, RSI moving up. RSI is strong. I don't completely hate the idea of a long trade from right here. I would personally wait for the break of 163, and you could use 169 as a target, top to bottom, looking at about a 4.9%, about a 3.9, about a 4% trade. Not bad. But that would be the safer entry here. But if you want to go long from here, I don't hate the idea. But that's where we sit with Optimism. We are reacting to the gain or loss of the level based off of volume profile. And even when you kind of zoom out here on the 2 hour, I like to jump between the 2 hour and the 12-minute, because you can really see how we kind of went heavy into the red, but now we are coming up in the momentum wave, coming up in the RSI, coming up in the VWAP. All right. And the reason this is a powerful position, why I like to wait for the break of 163, is because 163, like I said, is in the middle of a low volume node. And if it can get to that level, it's likely to run through it to this level. There is that could happen. That is the risk of trading. But that's also why I would rather wait for the alarm at 163 than go long right here, right now. A lot of times going long right here, right now might not be the play. Because, we have a bull cross on the 12-minute, but we also just had a death cross on the 2 hour. And on the 2 hour, the price could come up to the 50 and get rejected. So you could take on a risky long if you want to, but I would rather wait for one of these alarms. Waiting for alarms creates discipline. It makes you not feel like you're forcing trades. A lot of times when you're jumping in the trades just because you feel like trading, you're pissing in the wind is what you're doing. But when you're patient and you wait for the alarms to go off and then you make a case and react to the market, you're going to be a much better trader than someone that says, oh, yeah, the 12-minute looks good. Well, just as good as the 12-minute looks on the EMAs is just as bad as the 2 hour looks on the EMAs. And this is certainly a case where, you could test your luck. You could try to go long, but I'd rather wait for the alarm. All right. Pepe. We nailed this triangle breakout. We even gave the levels. Notice I measured this from the level I gave you, not from the trend breakout. We got a 44.6% move in 6 days where this triangle was given to the group well before it broke out. We've been watching that one for a while. And then we kind of investigated a little bit. All right. We kind of gave out these extra couple levels to monitor. Now that it broke out and was retesting, there was the point of control was pretty far below the price action at the time. And, at the time, the price was kind of, dipping between a lot of zeros, 984, a lot of zeros, 902. And, it was just kind of stuck. It was kind of stuck, to be honest. So what ended up happening here, as we were still above 902 when this happened. And keep in mind, this is a 2 hour chart we're looking at, not the 12-minute. So this position was given to you when we were still above 902. And as you can see in the original picture of this position here, a lot of this setup, the reason I posted this setup had to do with the volume profile. You see how the point of control was actually way further down, that red line coming out of the volume profile. I put it on the left instead of the right that time. That is a lot of why I put 902 there and wanted to use 902 as a short, because that certainly seemed like, given the volume profile, that there was a lot of liquidity to be caught up with. I don't know why my volume profile is not on right now. Right now the volume profile is on the other side, but you get my point. We were right here at the time I posted that setup. And I was certainly looking short as the volume profile was pushing short. So using that 902 level, a lot of zeros, 902 as your short right here, 7% short in a day and 14 hours. Not bad. Where the hell is my EMA? What is going on with these charts, man? Who would ever take an EMA off a chart? Not me. And this is kind of one of those cases where like this 848 level, guys, like, look, like when I gave you the setup, we had 902 as the short alarm. We had 848 as the next level. And look, it plays out. What happens? We use 902 as the short. And where does it turn around? Right there at the levels we gave you. And that's why these levels are the next level up. Say we come up here and we get through 984, right? Well, guess what? 103 is going to be our target. And just like in this next conditional range, now we're really where we are now. We're right back where we were before this happened. We're in the same range as before between 902 and 984. All right. And if we get rejected by the 50 EMA and lose 902 again, yeah, best believe 848 is going to be our target again. Rinse, repeat. It is in the red in the money flow, but it is coming up on the momentum oscillator. But still, just like before, the point of control is far below the price. It is testing the 50 EMA on the 2 hour just to investigate the 12-minute out of curiosity. Just like on Optimism, we're getting a bull cross on the 12-minute. It's looking good on the 12-minute, but guess what? The 2 hour is literally the opposite story. Bull cross on the 12-minute, but pending death cross on the 2 hour. So very similar setups across the board here for Optimism and for Pepe. This is certainly just like before. If you wanted to test your luck, you wanted to try to go long from here up into the 9-8 alarm based off the EMA cross and it being heavy in the green, looking strong, you could do that. You could force that trade and maybe scalp for 8%. But as a more disciplined trader, as a guy who's been around the block 100 times, I got my alarm set at 984 and 902. And this is my target if I go long, and this is my target if I go short. And I'm going to sit on the sidelines and let the bad traders trade in between here and let the smart traders trade the break of the range, because that's what the fact we're waiting for the alarm eliminates so many sloppy trades. So many sloppy trades get eliminated because we're waiting for an alarm, not because we're rushing in to force trades. Dogecoin, man, this one's been all over the damn place, and I did certainly feel the need to talk about Dogecoin. We did catch this little long out of this break of this trend down here. We've hit Dogecoin a couple times, not to mention this big blue line coming down. This was a big breakout trade right there that kind of coincided with the regaining the 10-6 level, kind of caught that entire move up if you played it right. And then I brought to the attention, so this is the 2 hour chart for Doge. When you zoom into the 12-minute, Doge was in a descending, broadening channel, and it was pretty obvious, the nature of that channel. What was interesting about the channel at the moment at that photo was that the point of control was actually above, but it was really starting to flop and grope at that 10-6 level. And this is a situation on trying to monitor when is the right time to react to an alarm. And when a chart is in a pattern like this, so say your 10-6 alarm keeps going off, it keeps flopping and groping above and below that alarm, but you're still in this descending pattern, right? At what time should you pull the trigger, if at all? All right. Take a good look at this chart, because here it is now. All right. And here is where I gave you the setup. All right. Here it is now. So really that 10-6 level, all Dogecoin did was really flop and grope around that level. It's been in a 7% range for 3 days. And could you have micromanaged just this one level for scalps? 3% that way, 3% that way, 4% that way, 4% that way. You could have, alarm off here, go up, alarm off here, go down, alarm off here, go down, alarm off here, go up. You could have done that. But it's also kind of noticing that this is kind of a longer play, because when you first got the setup, it was pretty far back in the descending broadening wedge, and for it to break out, it's really going to have to kind of flop and grope to the right to eventually get out of that channel, right? Well, guess what? It did get out of that channel. It did get out of that channel. And to be fair, from the break of the channel to there has been about 1% move in 11 hours. But to be fair, this is kind of an example of a setup that I'm watching, but a setup I haven't traded, because as you can see, it's just been doing a lot of flopping and groping. And to be fair, using this alarm was still worth a 4% trade in the past 24 hours. It's not like the alarm was worthless, but to be honest, all it really did for me is notice the range that it's in between 10.1 here at the bottom and now this level here, 10.9 at the top, just under 11 cents, because this 10.6 level is kind of the heart of this range. It has always come back to this level, but the real range now we have determined is between 10.1 and 10.9. So you could have caught a scalp or two out of this setup. It was kind of really more about monitoring the pattern, and you're really going to need a break above this alarm here at 10.9 to really have a solid leg to stand on, and that would be a 5.7% move up to the 11.5 level. And to be fair, it's not really looking promising. I have not posted in the Telegram group in the past couple days because the trading conditions have been this. Look from Wednesday to now, look, a 6% range. That's adorable. And the interesting part is that as the price kind of snuck up the hill here, look at the oscillator. See the curvature of the oscillator? That's really not what you want to see. That's not really, the bullishalarm.com. A lot of times I tell the group, if I'm not posting in the group, it's because I don't like the market conditions. I'm not going to post setups in my Telegram group just to say I posted a setup, just so I feel like I gave you something. If I'm not posting, I'm not trading. And if I'm not trading, there's a reason. And that reason has been, right now, the conditions of the market are not favorable. There have been, some altcoins that have moved. There have been trades to be found. But to be fair, with Bitcoin looking like this, we kind of just get this there's not a clear move. And everywhere, literally until Bitcoin breaks out of this bull flag, alt trading's not going to be easy. There obviously will be the standout few, and it has always been my job to find those. But in the same breath, man, like Bitcoin, it is good to see it get above 61. Let's hope Bitcoin could maybe push up into, this range here. It's kind of just below this range now, but if you look right here, see how Bitcoin kind of chopped right in there. So that's kind of saying if Bitcoin can get above this, maybe it could get above this. You can kind of get like a calculated, 2.6% trade off that idea. But other than that, like really, if you're looking at a 6-hour chart here, without the exception of the last candle on Bitcoin's basically been in a 1.7% range for 3 days. It's not a lot to go off of if you exclude the candle that just happened. So I think things are certainly developing, but in the same breath, this might look messy to you guys, but I did give you this setup when I was in Maryland, and my laptop did not have my laptop charger. My laptop was dead, so I had to use my phone. And basically the idea was that Fantom was losing the 50 on the RSI, had a red dot on market cipher, and was at the bottom of this uptrend range. And Fantom kind of flirted with this uptrend, with this line like 100 times, to be fair. But now look at ultimately what happened. Look at this. Boom, right there. 5% trade from that alarm. And then it comes back up, reclaims this level, and then look, boom. 17% trade off that alarm. That's off the angle of the uptrend itself. Say you use this 664 alarm that was given to the group as your short level. 12% in one day. Very simple trade. Very simple trade. All right. Even if you use the 6-3 alarm, this one here, boom, 7% trade in 22 hours. There was a lot of gold in the Fantom setup I sent you in Maryland. It looked very messy. There were a couple pictures. I just showed that one to show the gist of the trade. But that one, when you pair the confluence of losing structure, losing big support resistance levels, all right, and getting under the 50 EMA, even getting under the 200 EMA. And guys, look what was happening to the oscillators here. Look at what was happening to the oscillators. The Fantom started heading up the hill all the way, I mean, back here, right? You see this? You see this? Oh, not mean to move that. You see this right here? Look at the largest line on the oscillator. It was right here. The oscillator itself never went above where it did right here. Where was that? All the way back here when Fantom was at 49 cents. The bearish divergence for Fantom started right there, right here. That's where the bearish divergence started. Look how much further it went. And not one of those momentum oscillators got above that one. And look at the curvature. You see how it kind of shouldered over? It's kind of tall tale sign right there. Kind of very obvious that this thing was going to break structure, especially with the money flow curvature as well. The past couple of momentum oscillators have been kind of out of sync with the rest of them, but to be fair, we're in the red now. We're in the red now. We lost the green and went into the red. And when we came up and popped up, we were red. And when you pop up in a momentum oscillator, say we're in the green here, all right, and now we're in the red, right here. But then you come up in momentum. Look at what happens. Look what happens. Oh, I mean, do that. We came up in the momentum. That was the top out right there. Draw that line down right here. And then boom. And that was the fall we were waiting for. Top to bottom, that move was actually 23% in 2 days. We actually called, if you're going to go from the pattern, 15% in a day and 20 hours. If you want to go from the level I gave you, oh, come on. My mouse keeps messing up on me. That'd be 11% in a day. So a lot of really good trades there. A lot of good. I've been always big on trading Fantom. It's an easy chart for me to trade. I just understand how it operates. I understand how it moves. I know this looks messy, but I'm sure a lot of you are following along. But so the now what for Fantom is, okay, we just got back above the 63 alarm. Even if you scalped that alarm, I mean, you could have done something. Yeah, 1% in 4 hours, not bad. But the true story here on the 2 hour is that we're under and impending the 50 EMA. So this is based off the EMA. This isn't looking like a good spot to go long. I wouldn't feel comfortable going long with Fantom unless we broke this level here. That's 664. This actually kind of looks like it might get shut down again. And in the event the 6-3 level here this alarm goes off this way, I would be fine rinse repeating this trade again, or at least a similar idea. Wouldn't be surprised if that happens, to be honest with you. Wouldn't be surprised to see that happen, not one bit. Let me get rid of some of this chart graffiti here. This chart's already messy enough, I tell you. But yeah, those are the main setups, kind of the main ideas behind the trades from this week, kind of even coming into the 12-minute chart. And this is kind of what I've meant about, not posting in the past couple of days. Like even right here, look at this. The past day, all it did was range for 7%. Like there's no, and for the most part, this was that range. All these little pops here are kind of more of the outliers and the recent price action. If we kind of go from here to here before it broke out a couple hours ago, really a 3.5% range for the past day and 8 hours, which is this box until it broke out of that right there. So that's actually probably a level to watch if you kind of pull this across and then you kind of look at this as its own box of chop, right? So from that, you could kind of extrapolate. You have the level at 6.3, you add a level at 6.24, and you could even pull another level right here at 59.5. So yeah, I would certainly be aware of this box of chop in the event Fantom turns around and enters it again. With that, I mean, that's super common. Charts always go back to where they were. They always go back to where they were. And you know, the bull cross is incoming, just like it did on Pepe, just like it did on Optimism. We could get that bull cross on Fantom. You know, I'm sure there's an argument that could be made for right here, but for right now, considering the 2 to 12 minutes look okay, but the 2 hours look like that, you need to be smart, and you need to know, all right, we were in this big up channel, right? Well, guess what? We lost that up channel. It doesn't guarantee a ticket right back to the top. It really doesn't. And for that to happen, it needs to put in a lot more action. For me to buy that narrative, it needs to do better than this. This isn't enough for me to be bought into this. Maybe if it breaks this, we could have a conversation. But that's why you identify the most important support resistance levels. And this one for Fantom at 0.663, that is definitely the most important support resistance level on Fantom. No questions asked. Amazing. So let me go through the chat here. This is the members only live stream, but every time I made it members only, the chat wouldn't work. So I did a normal live stream, and I'm only responding to questions for the members, and I hope it doesn't do that again for next week. So definitely I will stay on for another 10-15 minutes if anybody has questions. If not, I am going to head out. I'm not going to give new setups because anybody can watch this video. I did go over the setups from last week, which I'm fine with sharing. Those positions are over, and we can still move forward with those alarms. But I do have a handful of setups I want to post with you guys. But honestly, I'm waiting on both of them. There are 2 setups I'm watching right now, and I'm not going to share them into the group unless I'm confident in the positions. So if you don't get anything from me today in the Telegram group, it's because I'm not confident in the trade. If you do get something from me today in the Telegram group, it's because I think it's going to pop off. I will always be completely honest with the group. I don't feel the need to post every day. I post when I think a setup's going to pop. And a lot of the times I'm right. You do have the 12-minute chart, Buzz Hernandez. You do have the 12-minute chart. You think you might not, but you do. You do. All right. So you kind of come into the time here, and then right here, add custom interval. You have minutes. So I could go 13 minutes or 19 minutes, or I could come to weeks or months or days. What if I wanted the 4-day chart? 4 days, add. Bang, and now down here, 4 days, boom. You see? So come here to the time, click that thing and click add custom interval. And you could add any amount of seconds, minutes, or hours. I can add seconds because I have the premium account. But if you don't have a premium, you can still add minutes and hours, stuff like that. But you need the 12-minute chart. I don't know why. It's just it's magical. I gravitated towards that strategy, and I've been trading with that strategy long enough to know how consistent it can be, especially in the right conditions. And I really think that's an important lesson I've been trying to drill home to people, is that trading, your strategy is completely tethered to your environment. And if you cannot realize the shift in environment, you're going to have trouble with the strategy. So you need to be able to look at a chart and determine, okay, this thing is going, or this thing is ranging, or this thing's getting exhausted, or this thing's pushing the spring down to pop off. You need to be able to look at charts and determine where we are in the environment, and then based off the environment, you choose the correct strategy. I've been saying this on the live stream all week. If you're a general and you're going into war, you're not going to have the same strategy for a battle in a field as you would for a battle in a Navy battle, or a battle in the forest, or in a valley, or in the desert. You're going to have a different strategy for every battle. And that's certainly the case with day trading. There is no one size fits all answer. There is not one magic thing I can tell you that's going to make you win. What it is the combination of all of the basic concepts. If you think, oh, that's a basic concept, that's a basic concept, that's a basic concept. Okay, you're right. Those 4 things might all be basic concepts. But when you combine them together and you get confluence, that's when you win trades. Confluence is key. It's all simple. Some TA people will tell you how hard TA is and why you can't figure it out. And they are the gatekeeper and they have the code. So you watch my channel. Fuck them. I'm here to tell you that you can beat TA. You can crack TA. It's not rocket science. Do not believe them. Focus on the fundamentals. Focus on the basic concepts. And once you get to a point where you can combine them together, then you will find confluence, and then you will start really winning trades. You just got to know what to look for. And that is what we do each and every day over at my Telegram group. And I could not be more proud of the traders in my group. If you'd like to join the group, send me an email, ajalphagroup@gmail.com. Take your trading to the next level. To the next level. All right. I'm looking for questions here. All right. I have the hardest time knowing when to long or short. I want to change my life just as you did, and I want to be an everyday trader. Okay. This is a very simple question, Jonathan. I know you want to be a day trader. And I think people like what it sounds like when you say it out loud. No, I'm a day trader. I'm a crypto millionaire. It sounds great. Feels great too. Not to be rude, but the saying it and what it sounds like is a lot prettier than what it actually takes. And what it actually takes is a psychopath amount of dedication. You have to be crazy to be like a really good day trader. And I know that because I'm a really good day trader. And I'm friends with really good day traders, and they're all batshit crazy. Every one of them, including Jada. I mean, how smart could she be? She's dating me. I'm kidding. Okay. All right. And her mouth is like, okay. And so I think, Jonathan, if you don't know when to go long or short, that means you have a pretty long way to go. All right. And what I'm going to say is that if obviously you must be in your first year or two, and that's fine. We all had to start somewhere. We all have to slowly work our way up the ramp. You know, when you're skateboarding, right, you don't just start dropping in the vert ramp on day one. You start at the little incline, and then you get to the coping, and then you get to the pool coping, and then the pool coping gets bigger, and then before you know it, you're dropping into an 18-foot death pipe. Okay. But you're not going to drop into the 18-foot pipe in your first year. You're just not. All right. And it's one of those things where you start. What happens with trading is people just think, oh, I have money, I can do this, because they have money. And then they don't know what they're doing, and they kind of get too deep, and then they get hit really hard or take a big dent or lose a bunch of money and lose that confidence before they even gave themselves a chance to really get in there and figure it out. So what I would suggest is to start using very small, minimal amounts of money. I would actually advise against paper trading. I don't give a shit about your paper trading. You know why? Because you don't give a shit about your paper trading. Because when nothing's on the line, nothing's on the line. You're not trading, like you're not feeling the emotion. If you put the, you know, if you're playing a game of rock, paper, scissors with your buddy Rob for free, no one cares. But if you're playing a game of rock, paper, scissors for $50, that's a pretty intense game of rock, paper, scissors, right? So what I'm saying, even if you're only day trading $20, $30, a small amount of money, you need to have something on the line so you feel it. Because you need to feel it to get to a point with it. I don't care about paper trading. All right. It's really about, if you want to do it for repetition, fine. But to understand the emotions, the roller coaster of emotions you will feel at any point in time of your trading journey, something has to be on the line. And it takes a lot of time. And if you don't know if you can go long or short, you have a long way to go. And start today. What's the point of using leverage if the loss is the same? Well, that's kind of a loaded statement there. Grateful Dad. The loss is not the same. If you're at, if you lose 5% on a spot trade, if you're at 2x leverage, you lost 10%. You get my point here. The more the leverage goes up, the less you can lose on the chart to lose the same amount. I hope that makes sense. All right. So Darren said, hi, AJ. Thoughts on a very low leverage long-term trade treated like a HODL bag, say a SWE 3X hold with a larger bag. All right. This is a concept that I have actually heard some people talking about. I just got an email today from someone, a Telegram member, who wants to do a similar thing. And I don't like it. I don't like it because, one, the longer you're in a trade, the more fees you're paying over time. And if you're in a leverage trade, even if you're treating it as a hodl bag, if you're in a leverage trade and you're treating it as a hodl bag, you still have to run a tight stop loss. And by tight stop loss, there is no stop loss on a spot trade for the most part. I mean, you could really, but most people don't. Most people ride the wave of spot trades because they understand things are going to go down and things are going to go up, and they're going to wait a couple years and it's going to happen, right? But if you're leveraged up, even a 3x, I mean, do you realize how much SWE has moved in the past month? You think it's not going to come down at all? Yeah, like what you're asking for. This is what people do. It's a desperate move, in my opinion, for people that don't have a lot of money, that don't know how to trade, but want to maximize the small amount of money that they have to get the most out of it. What I'm saying is that if you're doing that to make up for it, you're compensating. You don't know what you're getting into. Because one, what if you got liquidated? You're not going to get liquidated on a spot trade, are you? No. But what if you did? But so to avoid getting liquidated, now you have a stop loss. But now you have a stop loss on what's supposed to be a hodl trade. You get my point? So I think it sounds good when you say it out loud, but I don't think it's smart. I think a spot trade is a spot trade and a leverage trade is a leverage trade. And I think spot trades are for long-term holds, and your day trades are to offset your incorrect. Your day trades are there to offset what you lose on red days for your spot bags. And that's why you separate in your mind day trades, hodl bag. And if you're blending the two, you're kind of stuck. All right. I get this all the time. Hey, AJ, I bought some XRP to hodl at 40 cents. But now it's at 50 cents. What should I do? Well, sir, did you write it down when you bought it at 40 cents? Did you say, I'm going to sell here, or sell 80% here, or sell 10% here? Or did you just buy it and now you're holding it, but you wanted to hold it for long term, but you made 20%. Now you want to sell it? Like, what are you doing? And that's the kind of situations you're going to find yourself in if you're in a leverage trade hodl position, because you're not going to know when to sell. And it's not going to be easy to deal with the swings, because a coin like SWE swings. A coin like SWE moves, let alone at 3x leverage as a hodl. It's a bad idea. It's a bad idea, man. What are your thoughts on using Whiff Popcat as a form of leverage on Bitcoin moves? I noticed they follow Bitcoin's movements, but with much more volatility. I mean, Ogre, all the altcoins pretty closely follow Bitcoin's movements. I'm sure there's some with a higher correlation coefficient than others, but and also a lot of times a big lesson on this channel, Ogre, is that we use Bitcoin to determine altcoin direction. We've been doing that for years. That's kind of the point. But I don't think you use it. I still think you have to react to the chart you're on. And although I get my kind of ideas from Bitcoin, I don't one-to-one pair them with anything. It's just kind of an awareness thing. How do you get the volume on the right side of your screen? Okay, sure. So you're going to come over here to Optimism, and this is what I'll do. I'll get rid of it. All right, I'll put it in the trash. All right, you're going to come up here to indicators. All right, and you're going to type VRVP, which stands for Visible Range Volume Profile. Yeah, click on that, and boom, there it is. All right. And so a visible range volume profile will show you the volume profile for what? The visible range. Okay. So I think they might have recently changed the code on this one because it's a different color than it was before. I can fix it though. So this volume profile, this point of control here on Optimism is the whatever the leftmost candle is. So whatever's all the way over here, which would be January 23, this is the point of control for the volume profile from all the way over here. All right. So the closer you zoom in, like if you were to zoom to here, the volume profile is going to load and change here in a second. Because see how I did that? Because now the volume profile is at a different spot. Because now this candle over here is the visible range. So it's only for the visible range, aka how far you can see in the charts. And that's why there's fixed range volume profiles, right? Because if you want to determine what the volume profile is for 2024, if you want to start at the beginning of this year, right? Let's go to December 31st. All right, we're going to click on fixed range volume profile, which we have. We're going to drag from the top to right now and the local bottom. Boom. Right here, this would be the fixed range volume profile. And as you can see, it's pretty close to this one because we're in this year. But if we zoom out to, most of the chart, this one will change because it's taking all of this into account. And the fixed range volume profile is taking this one into account. Okay, so that's how that works. And with the normal visible range volume profile, you go to settings. I think it might have just changed the colors, which I don't mind. But you can even put it on the other side. You could change it, the row size. You can change the value area volume. You could change the developing point of control, some things I've experimented with before, stuff like that. The visibility, you can even put it on the other. Where's the other side? Why is it? I think I might have clicked on a different one than I normally use. Here, I'm going to get rid of this one. Indicators. Okay. I'm going to try to experiment with different ones. All right, what do we got here? Trash. Okay, that one's actually pretty cool. I don't hate that. It doesn't show a point of control, though. There's this one. Dynamic visible range volume profile. I don't think it's an old script. It has a question mark next to it. All right, so I guess the new standard changed its color. I'm gonna have to look into that, and I wonder if anything else changed about the script. I'm not much on coding, but I can figure out the little things. That's interesting. Okay. Yeah, I agree with Ogre on that. Paper trading equals bad habits. I completely agree. You got it, Jonathan. One day at a time. One day at a time. Crypto Knight says, by not understanding Confluence, it becomes a guessing game, and that becomes expensive real quick. 100%. That's why I react to the market. And although I might think something's going to happen, I ultimately don't make a trade until I'm reacting to something. Yes, Bitcoin follows Grandpa Bitcoin. That's right. Would you consider doing a crypto gaming video? $2 super chat from Sal R. It depends, man. It depends. I've done crypto gaming videos before. I've talked about Earthlings project building on HBAR. I think they're a pretty cool project, and of course, I am here to help any project building in Hedera or Algorand or VeChain or anything like that. In terms of like, am I going to play a crypto game on the channel? Unless it's gambling, probably not. I honestly, I think the crypto gaming industry has a long way to go. And just like the metaverse vertical has a long way to go. Because here's why. With where the metaverse and crypto gaming is now to what we think it could be in our minds, we're not even close to that. There's an ocean between what it is now and what we think it could be. And that has everything to do. And what's at fault for that misconception? Bad movies. Bad movies has created an ocean between what is and what we want. And we want it to exist, but that's not what it is. And it's going to take a lot of time and graphics and developers and greatness to get gaming to where we think it could be. And time takes time, but I also don't think it's going to happen overnight. I think the crypto gaming sector is a longer play than I think a lot of people want it to be. And I also, I think when it comes to metaverse stuff, I think the standard's not there, whether it's some sort of augmented reality glasses or something like that. I don't think there's a standard. So I kind of think all those projects are all promise. I don't know. I'm not against it. I want them to succeed, but the truth is, would you rather have a good game add crypto or crypto force a game? Like if V-Bucks in Fortnite became a crypto overnight, shit would change immediately. If Grand Theft Auto 6 had a crypto as a currency, things would change immediately. So that's what happens when a real game adds crypto, that's a win. But when a game no one knows about forces crypto, good luck. You know, it's not easy, man. It's not easy. And I know Dreamer Ogre. He's a friend of mine. It depends. The truth is, man, like I have not played a crypto game I enjoy yet. I've experimented with like stuff on Gala and stuff like that. And the thing with the Earthlings game I did a video on is that game's still being developed. And I did that as a pat on the back for the Hedera ecosystem. But it's not really about, what people have or don't have, or who's my friend or who's not my friend. Like I'm a personal friend with Dreamer. He personally invited us to go to Argentina this month. And hey, we might go. We don't know yet. But like, I know Dreamer, you know what I mean? And I know what he's doing. But like, I'm not saying I am or am not going to do a video just because someone's my friend. I am or am not going to do a video based off of if I like the game. You know what I mean? And I haven't played it yet. So you never know. But Dreamer's a great guy. And he's putting a lot of his heart into DeFi Kingdom, and I think it will probably succeed because he's a real dude. And if not, maybe it's not a good game. I don't know. I haven't played it. I have to play the game to make an honest. I can't make a statement about a game I haven't played. Is that fair? All right, guys. I am going to leave it there. I appreciate all you guys. One day at a time, everybody. One day at a time. I haven't been really. I want to get up more videos out on the channel and stuff like that. I just got a lot going on this week. You guys know what it is this week, what I've been focusing on. And also I was like kind of sick yesterday, and I'm writing this trading course, and man, it's just like I'm like juggling 15 chainsaws right now. So I do appreciate everybody's patience with everything. And I obviously know that, for my YouTube channel to succeed, I have to post more videos on YouTube. I completely understand that. But, man, it's, things change when it happens for real. I always used to tell myself like, oh, like if I made $1 million, like I would do this and I would do this. Then you make $1 million. You're like, oh shit, like that's not at all like what I thought it would be. So like the idea of something sounds great, but when it actually happens, it's completely different than what you think it's going to be. And it really just creates more problems. When they say more money, more problems, that's no bullshit, guys. That's zero BS there. So, as much as I want to help people make life-changing money, I also want to be completely real with you about kind of the ways you should protect yourself and the barriers you should put up and how to protect yourself when you make life-changing money. Because it sounds great. The dream's great. I'd buy this. I'd do this. I'd do this. But then it happens. And then people start talking to you differently. And people start treating you differently. And things change. Okay? And, I just want you guys, we're all going to have that success come. And I just want you guys to be ready for it when it happens, because it's not for everybody. It's not easy. All right. Much love. Get rich or get wrecked. Have a safe rest of your weekend. Much love. I appreciate you guys. Smash the likes on your way out the door, and stay tuned. Stay tuned. Peace.